Paint Q2 FY20 results in this conference call. On the call, we have Mr. K.V. Sanand, MD and CEO, Mr. Jayesh Merchant, CFO and Company Secretary, and also the President of Industrial JV, Mr. Amit Singhal, Chief Operating Officer, Mr. R.K. Jayamurugan, VP Finance, and Mr. Parag Rane, GM Finance. We now ask Mr. K.V. Sanand to take the call forward.
Good morning, everyone, and welcome to Q2 FY20 conference call. Few introductory remarks. The slowdown in the Indian economy continued into the second quarter with demand conditions adversely affecting industries. The overall challenging demand conditions were reflected even in the coating industry, which was adversely affected due to a prolonged monsoon in many regions. Actually, for the paint industry, when it rains, the painting activity drops. A monsoon extending right up to Diwali, and when you consider that the month before Diwali is the peak retailing season, actually has been unheard of in my 41 years in Asian Paints. Against this challenging backdrop, our decorative paint business registered a high double-digit volume growth, albeit lower than that witnessed in the first quarter. The economy range of products grew at a higher rate than the premium range, thereby leading to a high single-digit value growth for the quarter. Many of you have expressed surprise at this, but this phenomenon has been apparent for the last few years. While the premium end continues to grow, the economy end emulsions and distempers are growing at a much faster rate. This has been part of our strategy to grow the bottom of the pyramid through new economy products and focused advertising and marketing. This, coupled with higher growth in the putty segment, meant that volume growth would be higher than value growth. In addition, the Smart Care waterproofing and adhesive product range continued to grow well. The company has launched several high-end and super luxury products this year. Projects business from new construction sites and builders has been affected due to the tight liquidity conditions in the market. The footprint of AP Homes, our flagship multi-category decor stores, has been expanded now to 10 stores all over India. Fortunately, material prices remained benign in the quarter, and we took 2 rounds of price reduction in a few solvent-based products of a cumulative 0.4%. This was in addition to the 0.4% price reduction taken in the first quarter. The adverse demand conditions also affected both the joint ventures in the industrial coating space, with the automotive JV PPGAP continuing to bear the impact of a sharp slowdown being witnessed in the automotive industry. The industrial coating JV APPG performance was supported by a decent growth in the protective coating segment. Both the JVs registered improvement in profitability on the back of lower material prices and a contained growth in overhead costs. In the international portfolio, overall performance was slightly better in the current quarter as compared to the previous quarter, supported by a good performance in Nepal and a bit of improvement in Egypt. Revenues from greenfield operations in Indonesia grew well in the second quarter, although lower than plans. Benign material cost also supported the profitability of international operations. During the quarter, we divested the entire stake in Burgess Paint Singapore, the operating entity in Singapore, to further align the international portfolio to our growth strategy. Both the segments within the home improvement business, the kitchen business under Sleek and the bath business under SS, faced challenging conditions given the slowdown in the real estate construction space. However, both the businesses registered good growth with continuing focus on network expansion. The kitchen business has done well in the area of delivering full kitchens and the bath business in the newly launched sanitary range. The consolidated financial revenue from operations has increased by 9.4% to rupees 5,050 crores in Q2 and by 12.9% to 10,155 crores in H1. PBDIT before other income increased by 13.8% to rupees 970 crores in Q2 and rupees 19.3% to rupees 2,140 crores in H1. PBT increased by 13.9% to 852 crores in Q2 and 17.7% to rupees 1,877.5 crores in H1. Net profit from continuing operations increased by 67% to rupees 845 crores in Q2 and 41.1% to 1,519 crores in H1. Standalone financials, revenue from operations increased by 9.3% to 4,278 crores in Q2 and by 13.6% to rupees 8,658 crores in H1. PBDIT before other income increased by 12.4% to rupees 873.5 crores in Q2 and rupees 19.1% to rupees 1,963 crores in H1. PBT increased by 12% to rupees 793 crores in H2 and by 17.3% to 1,779 crores in H1. Net profit increased by 64.5% to rupees 790 crores in Q2 and by 41.2% to rupees 1,443 crores in H1. The company has chosen to exercise the option of a lower tax rate of 25.17% inclusive of surcharge and cess. The full impact of this change has been recognized in tax expense for the second quarter and in the first half of the year, resulting in a reversal of current tax expense and deferred tax liability of rupees 62.8 crores and rupees 24.2 crores respectively accrued in Q1 of FY20 and a reversal of deferred tax expense of rupees 107.6 crores in account of remeasurement of deferred tax liability as of 31st March 2019. This has resulted in a significant increase in net profit for the quarter and the first half. As mentioned in the previous quarter, the capex for the company for the current year is about rupees 700 crores. Going forward, the overall slowdown in the economy continues to persist, notwithstanding the series of measures being implemented by the government as well as softening of interest rates by the central bank to improve the sentiment. We will need to critically monitor how demand conditions pan out post-Diwali. And while raw material prices have remained benign so far, we will need to watch out for volatility in key raw materials, especially crude and related derivatives. In the international markets, we will need to watch out for the emerging situation in the Middle East as well as business conditions in key markets like Sri Lanka and Bangladesh. Thank you, everyone. We would now be happy to take any questions you may have.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. Participants who would like to ask questions, please press star, then 1.
Someone just connecting your Sriram said there's no time to get connected. So I was to check and he's doing it. So Sriram already in now.
What's 400?
Yes, problem. Yes, problem. Lines are busy. She's connected. So Sriram was trying to connect. Abhi ho gaya. Okay.
Participants who would like to ask questions, please press star, then 1. The first question is from the line of Avnish Roy from Edelweiss. Please go ahead.
Sir, my first question is on the domestic volume growth, strong double digits. So my question is, in terms of the geographical mix, are you seeing any underlying different trends? And you mentioned that because of the very high monsoon, there was an impact. So has that impact been overcome by early festive season? So has both of them balanced out each other?
Frankly, most people don't get their houses painted when it's raining heavily. So I don't think the impact has got offset. one can only hope that post-Diwali, post-monsoon, whenever that happens, retail painting will pick up.
And so geographical, any different trends?
I think the north has been a little better than the other regions, but otherwise it's more or less evenly spread. The impact of flooding and monsoon has been wherever these have been, and I think central India, western India have been, and a part of eastern India have been adversely affected.
And sir, two follow-ups here. One, last quarter you mentioned ex-putty, the sales, the volume growth is in double digits, so would that have been maintained even in this quarter? That's the first follow-up.
Yes.
And second follow-up, sir, is you mentioned you have done bottom of the pyramid, new strategies, new product, new marketing for distemper and emulsion. Sir, could you discuss that a bit more? Last quarter you had also mentioned you have gained shelf space overall, not just in the lower end. You have gained shelf space because of innovative schemes. So if you could mention these two in terms of strategy, what exactly has happened?
So this is nothing new actually. This is something we've been doing for the last 3-4 years. We have introduced a number of products over the last 3 years. For example, in the distemper category, we have Tractor Uno and Aqualock, which we have launched in the last 3-4 years, which are doing exceptionally well and leading to a revival in distempers for us after many years, over the last few years. We have grown there. We have continuously focused on tractor emulsion and ACE over the last 2-3 years. There's been advertising in this area after many years, and this has spurred growth. This year we have launched two products even more economical called Tractor Emulsion Spark and ACE Spark, which have met with a fantastic response. This has further spurred growth at the lower end. So we have been continuously focusing because we see there is still tremendous potential to grow at the bottom of the pyramid from both the unorganized sector as well as to spur painting per se. And this has led to widespread volume growth on an ongoing basis, but naturally at a lower cost.
Yeah, just to add that the strategy has been also to add value to the customer at the lower end, because in times when the demand conditions are not very, very buoyant, it makes sense to kind of really take care of the customer in terms of giving the customer far more value for money in terms of which comes in. And that strategy has kind of really paid off, because we are finding that today a lot of customers from the bottom end are graduating on to the startup emulsions which are there to that extent, and also in terms of graduating to better distemper products which are there to that extent. So that's kind of really something which has, helped us. And along with this, there has been the above-the-line push in terms of a communication program which has gone to the consumer, so that there is a knowledge in terms of that there is something which is available to us. And we find that, this has also given us a lot of shelf space, especially when we look at the Tier 2, Tier 3, Tier 4 cities which are there. It's given us a lot of shelf space there in terms of possibly giving an advantage over the competition.
Other follow-up on volume demand is in Q1 your rural and small town had grown faster than the bigger towns. Now if you see in Q2, most FMCG companies are saying that the rural has grown at 0.5x of urban. So in your case, if you could discuss rural versus urban, and is that still growing faster? So is rural still growing faster because of these proactive measures, or in paint you expect that your understanding is things are different versus say staple companies?
So rural small town, Tier 2, Tier towns are been continuously growing faster for us for the last 10 years, and they continue to do so.
Yeah, and what we also see is that the phenomena is that the metro towns in the Tier 1 cities are growing much slower in terms of what we see. We see that the Tier 2, Tier 3, Tier 4 cities, how we kind of say, rather than rural kind of a zone, these cities have done fairly well for us, and there is also regular expansion which is happening in these cities. So it's not just a function of just the demand, it's also a function in terms of the kind of expansion which is happening to that extent, and many more people coming into the paint cycle to that extent. So I think that has really helped us, and this phenomena has been there for quite some time, but we are finding this phenomena slightly far more in the last 2 years to that extent in terms of that it has paid off along with the strategy we have taken at the economy end.
Are we cut off?
Sir, my second question is on the domestic sales growth. So last few quarters, the value growth was 2 to 4% higher than the volume growth. In one quarter, dramatically, it's shifted by 6%. So now volume growth is around 4% ahead of the sales growth, while in Q2, the volume growth was 2% lower than value growth. So there is 6% dramatic shift in one quarter. If I understand, the price cut has been just 0.4% plus 0.4% in the best case, so hardly 1% gap. So where is this 500 bits gap coming from? Is it only because of downtrading in one quarter? Can the downtrading be so much high?
See, it's not so simple. You have, I will say, 3-4 phenomena occurring simultaneously. What impact each phenomena has is very difficult for me to put down. We need to examine the whole thing over the full year to be able to explicitly tell you in a more specific manner. But if you remember last year, on July 1st, GST was reduced from 28% to 18%. So there was a much larger movement of higher-end products in Q2 vis-a-vis what would normally have happened. This year was a normal year. So when you compare the top-end products, that disparity arises. Secondly, this year you have a much earlier Diwali compared to the previous year. You have a much more extended monsoon compared to the previous year. You have a slightly larger shift in products because the real estate business has got hit to some extent this year. So you can say the premium end products going on exteriors, etc., have got affected to some extent. And lastly, our entire impact or the momentum that we have gained in pushing at that bottom of the pyramid has been gaining steam. The impact of that also exists. Yeah. So now you take out how much you want from where. I can't answer the detailed breakup.
Only one small point I'll add, just to kind of further your understanding. So I mentioned earlier that the metros and tier 1 cities have grown much slower for us. And today, if I look at, there is a larger contribution of the premium and the luxury products which come from the cities to that extent. So from that point of view, I think it kind of explains some slowdown with respect to the premium and the luxury products to that extent. But, today, given the fact that the season is shorter, we have more customers in terms of the, the shorter painting cycles which come across, which kind of graduate to more economy and mid-end products.
And sir, last question, other expense up 17% quarter-on-quarter, 20% YOY. So is it because of ramp up in one of the new factories, or ad spend has also moved up sharply?
Primarily due to the advertisement spends. Sales promotion spends have been much higher in Q2 versus, say, even Q1 and YOY basis also.
And why would that be?
Early Diwali is one of the reasons for this.
Yeah, so I think when demand conditions are slightly taxing, we thought rather than withdrawing money and kind of watching expenses, it is better to kind of invigorate the customer and get the customer right up there in terms of some of the selling propositions we had.
So there is no ramp up in terms of factory?
No.
Factory cost versus Q1, Q2, there would not be a significant change. Obviously, versus last year, there would be a certain increase of the Mysore Vizag cost coming in.
Okay, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Avi Mehta from IIFL. Please go ahead.
Hi, sir. I just wanted to understand the comment that you made in the start about a month before Diwali is the peak season. Diwali is kind of earlier by a week. Would that mean that still October is the key month from a festive demand point of view? Is that how it occurs?
It would be probably 15th September to 15th October. You have to go by days. We can't go by calendar months because Diwali falls. So somewhere between 15th September to 15th October, about 10 days before Diwali, would be the peak retail sale from the company point of view. The retailer would continue for another 5 days, but from the company point of view, the retail peak period would be somewhere from 15th September to 15th October.
Okay, and hence your comment about, how the demand behaves after Diwali, determining the trajectory going forward. That is why your comment, right, sir? Is that
and we had a monsoon in the rains have continued during this peak period. We had heavy downpour even yesterday in Bombay in the evening. This is all not very nice for us.
No, fair enough, sir. So basically delayed monsoon. So in that sense, 3Q and the base would have the 3Q base would have the entire festive demand in that sense. So
yeah, but last year you got to remember Diwali was late, so Q3 was very good.
Yes, correct. So the way I should look at 3Q is that will be there in the base, but the benefit or the tailwinds are your initiatives, what you're doing in the lower end, which would continue.
Yeah.
Or does that GST anniversarization also mean that is also there in the base, sir?
No.
No, right?
GST
Okay.
angle would have been a little bit in Q2 of last year. Not really otherwise.
Not really otherwise. Okay, sir. Fair enough. Sir, the second bit was this mix change that you are seeing. Is that also a similar trend on the secondary part? So there is no inventory change that is happening in the channel, right? The mix in the inventory mix is also not changing for the channel, right?
No. It's been changing for a period of time. It has not been apparent to all of you because we have not published it. But in a quarter where we had so much difference, we thought we got to make it more explicit.
Yeah, and see, people don't really change inventory. They go by more in terms of, how the secondary demand is kind of coming and the buying pattern kind of exists, adapts to that. So, while you can have momentary periods where there could be inventories going up in a certain kind of product category, but people adjust to the secondary demand far more strongly. And you would not kind of, over any prolonged period, have an inventory mismatch of the dealers and in a very big way.
Okay, so the reason why I was asking is one of the drivers that you indicated was also the launch of new products in the economy, and you highlighted Tractor Spark and e-Spark. So which is why I was trying to understand whether that has also driven or contributed to this mix change disproportionately, because all that will be sitting in the inventory channel inventory and will be occupying shelf space. That's why I was trying to understand the materiality of that.
So see, the new products as a strategy has been key to our thing for the last now 4 or 5 years, and every year we have a good set of products which come both at the premium end and at the economy end. So I think that strategy, when a new product is launched, retailers definitely kind of stock it because, we also kind of work on the demand in terms of how it has to be done. So there have been, I think, good products launched at the premium end as well this time to that extent. It's just that today the value proposition to the customers is far better at the economy end. Therefore, you will have a higher quantum of a response which will go at the economy ends for any new products which are launched.
Okay, sir. Okay. And this, fair enough. And this last part is, sir, on the input cost front. I mean, there is obviously the mix impact that is there in 2Q as well. So if you could help us understand, would the first half be a better way to look at how the input costs are kind of behave? Current input costs are there in the margins? Would that first half gross margin number be appropriate metric? Or would the YOY change? Because the YOY change is no longer accurate, as you rightly pointed out, because 2Q has something in the base which is not there in this 2Q.
So, see, what really happens is that in general, the Q2, given the fact that it's a seasonal period, there is relatively a higher discounting which happens in the Q2 period traditionally as a pattern which you would see, and therefore, there has been a little bit of a skew which has happened as compared to Q1. But that's not something which is so alarming to kind of really look at that we have intentionally done something which is far more what is required. But I think in second quarter, usually we have a higher kind of an input cost which kind of comes in because of the incentivization both at the retailer and at the customer end.
And with the earlier Diwali, Q2 input would be marginally higher than last year because Diwali has come earlier.
So sorry, why would that happen? Because you said Diwali typically has a better mix, right, sir?
It'll come in sales.
Sorry, no. See, what we were trying to say is that in general, when you look at Q2, in Q2, given the fact that the season is there, so Diwali, 15 days here and there, but in general, Q2, we have a higher input spend which happens because of the incentivization programs in terms of what we do, both at the retailer, consumer, and the applicator end in terms of what happens.
Are you meaning input cost in terms of as material cost?
Yes, sir. Yes.
Oh, sorry. We made the discounting cost. So, in terms of material cost, I think the trend still remains between Q1 and Q2. There would be certain sort of reduction in, say, the material price index for us, but it would not be significant. Q1 was a much significant sort of reduction over the previous. I think we answered you initially because we had a different understanding of when you use the word input cost. Okay.
Okay, sir. So, sorry, sir, what is the answer that I should I'm sorry.
There's actually not very much of a difference in the material costs, etc., between Q1 and Q2.
Between Q and Q2. Okay, so the first half is a fair representation of the margins should. Okay, fair enough, sir. That's all from my side. I'll come in the queue for any other question. Thank you very much, sir.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi, thanks for the opportunity. In terms of demand scenario, how would you size up the trend in terms of, is it, should one see mass end of the portfolio outperforming rest of the portfolio as a sign of down trading, or is it premiumization from unorganized to organized?
I would see it more as premiumization from organized to unorganized to organized, especially in tier 3 and tier 4 cities. Like we mentioned, there is a relative slowdown of premium products in the major metros. But you can't actually say down trading yet because there is growth in the premium end also.
So second, you elaborated enough on monsoon's impact on Diwali sale also. But in terms of consumer behavior, what is your take on whether if a consumer misses the cycle of painting before Diwali, does he postpone it by a year or 2-3 quarters, or he still goes ahead with the painting, let's say, post-Diwali month as well?
So what really happens is that there are different consumer segments who kind of come into play as we look at the seasonal quarters and some non-seasonal quarters. There is a typical consumer profile which actually paints once a year or once in 2 years kind of a zone. And these are customers who largely come into the cycle in terms of more distempers and economy emulsions and so on and so forth to that extent. And we find that some of these customers do not kind of really come back in Q3 kind of a thing in terms of postponing their purchases. Therefore, then possibly the year is missed and they will kind of look at deferring their painting to the next year. So that kind of is an effect which happens with respect to the monsoon specifically. So therefore, there would be a certain segment of customers who would have then now got out of the painting cycle, and we would not kind of get them to see in Q3 to that extent. And typically what happens is people who kind of miss out in Q2, these are the large, 2 BHK plus bungalow houses kind of a thing, which definitely, if they have kind of missed the seasonal quarter, they would kind of come back in Q3 to that extent. But the other aspect to it is that there is also a large amount of projects sale which happens, which kind of gets affected far more strongly, because typically, if monsoons would have finished around 20th September or 25th September, we would have got that quantum of sale which would have come in to that extent from a project's point of view in terms of new construction and other repainting cooperative societies and so on and so forth.
Sure. And so lastly, on waterproofing, you had shared our ranking last quarter that we are number 2. So in terms of distance versus number 1, how far are we and how much ahead are we from the number 3 players?
So we are in the middle of the year, so I think it's very difficult to say at this stage in terms of where we are, but I can tell you that we have done well.
And in terms of product performance, I believe the warranties in terms of what we would have implemented products 2 years back, the performance of the product we must be knowing by now. So how would you rate that in terms of warranties which have come for the products?
Sorry, Mr. Question.
So by and large, the performance has proved satisfactory and we haven't got too many warranty complaints. Wherever some warranty complaints have come, more often than not, it's due to improper surface preparation or application of the right product in the right place.
Sure. That's all from my side. Wish you gentlemen a very happy Diwali and happy and prosperous Diwali.
Thank you. Same to you.
Thank you. The next question is from the line of Rajesh Kothari from Alpha Accurate Advisors. Please go ahead.
Sir, my question is with reference to, the total capex, for FY20 and FY21, and how much capex is already on stream and how much capex is still balanced for FY20. And if you can give some color on the total depreciation, what one should look at from FY20 perspective.
So FY20, as you said, we have a plan of at least 700 crores on the capex side. Some of it towards balance capex in the 2 plants from a capex spend point of view. So that will happen. That's about, I think, some 300 to 350 odd crores. The rest is regular maintenance capex. Next year, it should be the regular maintenance capex by and large.
So when you say total 700 crores, out of which how much is already done?
200 crores. Yeah. It typically happens towards the third, fourth quarter in any given year.
Sorry.
About 200 crores has been done. The balance will occur over the next two quarters.
Oh, so about 500 crores will be done over next 2 quarters. Okay. And the 200 crores which is already done, so that is already commissioned or, that will be commissioning from...
A large part of it is towards the balance spends in Mysore and Vizag, which have already been commissioned.
Okay. So your full year depreciation, therefore, what one should assume, full year depreciation?
I think the first half number is a very good reflection of it because the other spends are as and when they get sort of spent, we will capitalize it. But that's a smaller amount.
So basically 500 crores depreciation, that will come to, that will come next year. That's what you're trying to say.
Yes.
Okay, great. Thank you, sir.
Thank you. The next question is from the line of Nilesh Shah from Morgan Stanley. Please go ahead.
Thank you, sir. Just on the demand side again, just to clarify, after all that we've said about the, the monsoons and the product mix changes, etc., basically for the domestic paints business, I'm leaving out putty and waterproofing out here, the volume growth is still double digit for the quarter.
Correct, yes.
Okay. And secondly, on the price cut which we've taken, it's only on solvent base. If it's 0.8% for solvent base for the portfolio as a whole, it will be less than 0.3, 0.4%, right?
It's 0.8% as a whole
on the portfolio.
So it's much higher for solvent base.
Okay, much higher than for solvent base. Okay, fine. And finally, on the other income, why the other income jumped up the way it has this quarter?
There's a slightly, there is an extent of higher income from the surplus treasury funds that we have booked in Q2 versus Q1 and even last year.
Okay, noted. Thank you very much, sir.
Thank you. The next question is from the line of Amit Sachdev from HSBC. Please go ahead.
Hi, good morning, everyone. So my question is on the, obviously volume growth has been stellar and led by you have explained in adequate detail why it has happened. But if I look at the gross profit line, which has, basically gross profit pool has expanded by 16%. And I understand the input prices were benign and, and that has led to perhaps this gross profit despite the revenue growth was 9-odd%. So can I, sir, we assume that this mix that has already happened in Q2, and I reckon that Q3 is also a bit of a mix gets inferior as we go into the festive quarter and probably runs into the Q4 as well with December being very heavy. So can we take that sort of, gross margin picture, assuming the input prices are not moving too much, to Q3 as well? Is this the mix going to change different? I think we already had the mix which used to be in the festive quarter. Is this a fair understanding of how we should think about this?
The mix in every quarter for the paint industry is a little different. The mix is a little richer in Q3 and Q4 compared to Q2.
Oh, mix will be slightly richer, is it? Okay, yeah. Relative to Q2. Okay.
Yeah.
I thought last year Q3 was huge in distemper and
last year Diwali was later.
Okay, understood. So you perhaps the mix will start to become slightly better in Q3 this time. That is a fair understanding, in Q4 as well.
Correct, yes.
Okay, that's great to hear. And sir, one comment you made about the transition from the unorganized sector that is happening as a result of consumers seeking more value, but also your own focus on that segment, launching new products which is offer greater value for money. So this seems like a great, powerful transition that has happened just post GST. And do you see that momentum has now a structural, and you would perhaps excelling against your competition in capturing that segment? Because given your size and scale and distribution, so should we assume that the volume growth that you're getting, despite the demand being weak, that should be a structural trend, right? That volume growth should be coming your way nonetheless, regardless of the demand situation is.
Aapke muh mein ghee shakkar.
So do you see, sir? I mean, I'm reflecting that. Would it is a safer to assume that
our competitors copy everything we do.
That's what I was wondering, that when you are capturing, others are also doing the same thing. And how should we assume that structural trend is likely to stay? And are you seeing that to stay in coming months as well?
Well, see, what we see is that, obviously given the fact that...
Hello?
the advantage of the first movers in that segment in terms of creating value kind of for the customer. We've done that earlier as well, and we see that you definitely get initial surge, which is definitely good, but over a period of time, we also see that competition catches up in terms of launching something which is similar. So you can't kind of assume that the same kind of trend would kind of continue forever. So it's basically a time-bound thing in terms of what really happens, and we think that possibly the surge is higher at this stage in terms of what we've got, given the fact that we've got the first mover advantage in terms of some really good new products which have come at that segment.
Sure. So that's very helpful, sir. All the best and happy Diwali to you all.
Thank you.
Thank you. The next question is from the line of Kunal Thanvi from Banyan Tree. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question was, again on the retail demand.
Excuse me, this is the operator. I'm sorry to interrupt. Sir, we request you to use the handset, please. Your voice is not very clear.
Sure. Is it clear now?
Yeah.
So thanks for the opportunity, sir. So my question is also on the demand. So can you throw some light on the secondary growth rate that we are seeing in the secondary market? And, now, and a follow-up on that, you just mentioned about the fact that there is a set of consumer behavior, in the economy or the lower end of the market, which don't come back in Q3 post-Diwali if they miss out due to monsoon. So is it fair to assume that in the upcoming quarters, that segment would not see the kind of growth it is seeing now?
So the secondary sales have definitely been lower because of the fact that the consumer demand has been a bit stunted to that extent, coupled with obviously what we spoke of in terms of monsoons. So as compared to Q1, you definitely see that the demand conditions have been poorer in Q2 in terms of what has happened, and that is reflected in the secondary sales also, which has kind of happened. We also see that, as I said, that some of these consumer segments would not kind of come back to us in Q3 to that extent, but obviously we are relying in terms of, seeing that today when the monsoons kind of stop, we do see something which starts happening from an exterior segment, because the exterior painting literally comes to a stop while the monsoons are going on. So I think when we step into Q3, we will definitely have the other consumer segments, so who would be definitely there in that segment. Yes, there is some loss which of the shorter cycle customers who have not kind of come in this Q2 at this moment, but we would definitely get the other segments in as we kind of look at Q3 and Q4.
Sure, sir. Yes, just to follow up on that. So earlier participant asked about inventory changing in the dealer level. So when we see the growth in our numbers in last 2 quarters, as you rightly mentioned that it was largely because of the economy segment being pushed. Then with Q3 and Q4, maybe the premium part of the portfolio may do good on the secondary level. With dealers, while the dealers have inventory for lower end products, so how does that catch up? How do we look at that kind of inventory and demand mismatch that might occur?
So actually there is no mismatch which really kind of happens, because as I had said earlier also, it's not that we have grown only in economy products. Some of the premium products have also grown. So you can't really kind of take a stance in terms of not having inventory in the premium products at all and kind of build inventory in the economy products. So I think the retailers won't really work like that. So we don't see really a big mismatch in terms of the inventory. As I said, retailers are fast enough to kind of adjust their inventory from the point of view of how the consumer demand is coming, and as such today what we see is that the inventory which is stocking at the dealer's end, at the retailer's end, is not of a very, very high proportion, because of the fact that our servicing to the retailer is pretty good in terms of how it kind of happens. So we don't see very high levels of inventory possibly stocking, and therefore the mismatch which you are talking of is not possible.
Sure. Thanks for the clarification, sir. And one more question on, maybe a broader one, not for 6 months or 1 year perspective, from say 4-5 years perspective. How do we look at the premium end of the market? Right now we understand, due to the latent shift of unorganized to organized, we are seeing a very high growth in the economy segment. How do we look at the market, say from a 5-year perspective in terms of growth?
So, it's very difficult to say in terms of, predicting because, if all of us were good at predicting what is happening in 5 years, I think we would have been kings to that extent. So, it's very difficult to say in terms of saying what's going to happen this thing. What we can only kind of say is that, obviously, as we have seen in the past, Q3, Q4, the mix definitely gets much better and we are looking forward to kind of that mix kind of shaping up.
Okay, sir. Thanks a lot for that.
Thank you. The next question is from the line of Abhijit Sinha from Pi Square Investments. Please go ahead.
Yes, sir. Good morning. I want to understand, could you just throw some light on the other income growth?
We just explained a few minutes back that the other income growth in Q2 is largely because of a higher treasury income booked in this quarter.
Okay, sir. Okay, sure. That's it. Thank you.
Thank you. The next question is from the line of Amit Purohit from CGS-CIMB. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, just on the input cost, when I look at the Q4, Q1 and Q2 quarters, the gross profit growth in Q4 was lower than the sales growth. In Q1 was in line with sales growth and now it is higher than the sales growth. And your comment that the raw material index is more or less same as Q1 and Q2. So, I mean, how do I read this actually? Where am I going wrong in understanding it?
So it depends. There are a lot of factors here. It depends on what the material price index were in the last year, Q1, Q2. So we had seen a massive increase in the index in last year, Q2. And therefore, even on a probably a similar index in this year, Q2 versus Q1, you will probably see a larger benefit in Q2 versus last year, Q2. Then the price changes that we took over the last year and the price reductions this year also play a role. So it's a mix of all these factors. But as I said, H1 material cost is probably a right indication of where the material prices are sitting.
Sure. And what would be, is our current buying price lower than the H1 input cost for us?
Can't really comment on that. We'll have to wait for the numbers.
Okay. I'm saying just current buying price for us.
We can't discuss that at this stage.
Okay. Thank you, sir.
Thank you. The next question is from the line of Shirish Pardeshi from Centrum. Please go ahead.
Yeah, hi, good afternoon. I have a few questions. The first question is on inventory. Typically, what is the inventory for the paints with our dealer?
It varies from 15 days to 30 days generally. If you're a depot town dealer, you tend to stock about 15 days inventory. If you're an upcountry dealer, you stock about a month's inventory. That could be an average. It could vary from dealer to dealer. Larger dealers tend to have smaller inventories in number of days. Smaller dealers tend to have larger inventories in number of days. So the mix can be you can have quite a range. But I'm giving you an average.
Yeah, got it. So how would the new product inventory would have then increased? So you're saying this average 30 days for the rural dealer would have been adjusting to lower inventory?
Yeah, new products represent a smaller proportion of the total sales, so they really don't affect inventories to the same level at the dealer level.
Also, see, for new products, we carry a slightly higher inventory. So basically, the retailer doesn't kind of adjust in terms of kind of increasing his inventories to that extent. So he kind of banks on our inventories being there too, so that the servicing is much better. Because the predictability of the new products is also lower, so we tend to carry a higher inventory at our end.
So in the current economic slowdown, people have spoken liquidity issues. So for new products introduction in the trade, have we extended some sort of credit line?
No.
Okay. My next question is on what is the industry size or maybe contribution for paints for putty and distemper?
So putty would be anywhere close to about 5,000 to 6,000 crores as a overall segment in which there are lots of players which are kind of involved. And when we look at distemper would be close to about another, I would say, 2,000 crores? 5 lakh into 20. So 5 lakh into about 10,000 crores. 5 lakhs into 20 was or 30 was per year. Lower end distemper was so 30. Only about, I think, anywhere between 12,000 to 15,000 crores.
Okay, that's great. In terms of now the premium distempers, is that we are the leader in terms of pricing?
We would probably be the highest priced distempers.
And you say that this price is higher. So this is, we have a differential price for north and eastern market, or is
No. We have uniform pricing. We have two qualities of distemper. The largest selling distemper is called Tractor Uno, which is priced a little more aggressively, and we have a better quality distemper which has an element of you can say waterproofing built in, which is called Tractor Aqualock.
Got it. One quick question on the home improvement. We have seen that the last 4 quarters we have been giving the same commentary, that network expansion. Could you say some elaborative explanation? What is the network? What are the markets? And where we see, I mean, obviously the numbers are looking very impressive YOY and quarter-on-quarter.
So, as far as network expansion go, both home improvement businesses, we definitely are looking at newer geographies where possibly the representation is poor, and in the last 2 years, 2.5 years, the expansion has been very, very aggressive in terms of what we have taken, both from the point of view of kitchens, which are the full kitchens we deliver, as well as the components business, which is there, where we are looking at more distributors and more reaching out to smaller towns and geographies where we were not represented. Similarly, in terms of the bath category, we have been opening new retailers across the country, new distribution setups which have come in to that extent. So that's been an integral part of our story in terms of what we have been doing in the home improvement business.
Yeah, thanks, Amit. My question is a little different. When we have done and met people, so our product sales has been driving. So is it safe to assume that when project business is not growing, the product business is driving this growth?
That's right.
And in the kitchen and cupboards, what we have introduced, the growth is driven by that segment?
No, so it's a retail. The full kitchen segment is doing very well.
Okay. And how big this, in terms of contribution, would be 1/3 to sales, to assume?
Of what?
The full kitchen business.
Yeah, so the full kitchen business would be close to about 1/3, yeah.
Yeah, and product would be about 40 to 50%.
Yes.
Okay, just last one question. Now, you said that there is no inventory build-up which has happened. And if the economy segment where we have seen the monsoon has been panning out very well, so that deferment of the purchase, then is it that the inventory would get stuck for maybe another 2 quarters till the summer season?
No, so that's what we were saying, that today the retailer would never kind of really increase his inventory, given the fact that our servicing is very good and the inventory varies from 15 days to about 30 days. You know, the retailer is quickly able to adjust his inventory far more strongly to that extent, and therefore the pile-up of inventory would really not happen to that extent. So it could be a very small phenomena for a week or 10 days kind of a zone which will happen, but we would not kind of see any big pile-up of inventory happening at the network.
See, the other thing is now solvent-based products are a much lower proportion of the total volume where we provide all the tinted shades. All the other emulsions and even distempers to an extent can be tinted in dealer outlets. So all you're supplying is bases. So in terms of dead inventory, frankly, there is very little dead inventory at the dealer's end.
Okay. Just one last quick question on the international business. So we have seen that Nepal is doing great. But then you sounded there is some issues in Bangladesh and Sri Lanka. Is it because of the stability of business, or is it?
See, there was a very severe monsoon which affected both Bangladesh and Sri Lanka. They are more monsoon prone than even India, so to speak. And in general, the economic conditions in Sri Lanka are not the healthiest. While the Bangladesh economy is doing reasonably well, the Sri Lankan economy over the last 2-3 years has been going through a rough patch.
All right. So, thanks and all the best, and happy Diwali to you all.
Thank you.
Same to you.
Thank you. The next question is from the line of Jitin John from CLSA. Please go ahead.
Hi, good evening, everyone. Good afternoon, everyone. This is Vivek from CLSA. Sorry, I have the same questions which have been repeated on the volume value, growth. So first one is the gap between volume and value, and assuming the mix improves as you highlighted in third quarter, which would be the case in the base quarter also. The delta, is that what, we have seen around 5-6% this quarter? Is that what will continue or persist for the rest of the year also?
No, we just answered that question saying that, it's very difficult to predict that zone, but as we see when the mix gets better in Q3, Q4, obviously that difference is bound to come down.
Okay. See, the reason is because third quarter last year will also have a better mix, right? So to that extent that the mix is sequential, not YOY, right?
Also, the reason which has been that the Diwali has been preponed this year, and as a result, last year, since the full October we got in terms of the retailing period of Diwali, we think definitely this year, Q3, the mix would be much better.
Okay. And while you have highlighted upon some of these aspects, has there been a increase in promotion discount, because this -5.6 still looks very baffling to me. So whatever your answer, leaving that aside, has there been higher promotional discount which is also impacting this number?
So yes, second quarter definitely sees a higher spend of the discounting which happens, because this is typically a period when there are lots of consumer schemes which happen. There is incentivization schemes for the retailers also which happens to that extent. And therefore, what we see is that in the second quarter there is a slight skew in terms of the input spending which happens to that extent, and that is something which is definitely there this year as well.
But that's year on year, you will not have that much of a difference.
That is the precise point, sir. So is there something unusual on the promotion discount rebate or it's pretty much... And you keep mentioning about, slowdown on your calls, but, this is seventh quarter to my understanding, which is double-digit decorative volume growth. So, even if economy...
That is slow.
So in good times, you expect what kind of volume growth if,
Very high double-digit volume growth.
Okay. And finally, if I can request, you are a fairly large company, obviously in terms of business, but also in terms of market cap. Can we see better disclosure from you, maybe volume adjusted? You give volume growth, which is like very abstract. If it can be value adjusted growth. Even multinationals like Unilever, Colgate, Nestle are giving that. It's just a suggestion if you can take on board, because you're, in terms of market cap, you are, one of the leading ones in the world now. So if you can take that on board.
We'll consider it.
Sure. Thank you, sir. All the best.
Thank you. The next question is from the line of Nikhil Upadhyay from Securities Investment Managers. Please go ahead.
Yeah. Hi, good afternoon, sir, and thanks for the opportunity. Sir, just one question. One of the comments you made is that the premium, which basically sells in the metro and tier 1, the growth rate have been lower. Now, if I consider this tax benefit which we are getting, do you think that the value proposition as you mentioned that we are driving the value proposition at the lower end of the segment, but do you think the economy or the premium and also the value proposition needs to be passed on? Because if you look at last 2 years, when we had the GST benefit which we passed on to the customer, now we are again getting this tax benefit. So how are you thinking about bringing back or improving the growth rates in the premium?
No, so that's not the case, because see, if you look at, it's not that there is anything wrong with the value proposition of the premium products as well, because the premium products relatively are doing much better if we look at from the point of view of tier 2, tier 3 cities to that extent. So it's not that there is anything wrong in the value proposition in terms of what's coming for the premium and luxury products to that extent. And I think at Asian Paints, we clearly kind of benchmark as saying that we need to have the right value proposition delivered to the customer at any price point, be it economy, mid or premium or luxury to that extent. So the question still very clearly pertinently points to the fact that the growth, the demand conditions are relatively weaker, and therefore we feel that just doing anything adjustment with respect to pricing is not going to spur up that demand.
Okay. Thanks a lot.
Thank you. The next question is from the line of Pulkit Singhal from Motilal Oswal Asset Management. Please go ahead.
Yeah, hi. Thanks for taking my question. Sir, in the FMCG industry, at least we had observed over the last 5-7 years that many players were able to drive premiumization by introducing lower priced SKUs for their premium products, which to their surprise obviously worked quite well. Now, I don't know how feasible it is to do in the paints industry, given that it's a specific volume-based product. But have you tried pushing that even in areas where you would ideally think a premium product would not sell, by saying that why don't you just try one room with this lower SKU paint or something like that?
So it's not as if premium products don't sell in rural areas or small towns. They sell all over the country. But as a proportion of the total sales, premium products are much higher in the metros. So all our products are available everywhere in every small town and village in the country. So even tier 3, tier 4 cities contribute to a sizable sale of the premium and luxury. It's not that it is not there. So we already have people who do one-room makeovers, they do one-wall makeovers and so on and so forth. So all those things are there, which we are kind of doing to that extent from what people have been kind of experimenting with. We have all sorts of textures and stencils and, other kind of, inspirational wall finishes which people are using across the country.
Got it. So in terms of the metro and tier 1, I mean, looking at the last 5 years growth rates, so do you think that these markets are now largely saturated in terms of volume growth and it's only the premiumization which leads to the value growth out here?
Not exactly, because what we see is that, you can't really club the metro and tier 1 also together, because metros behave differently and tier 1 behaves differently to that extent. Relative to basically the tier 3, tier 4 cities, there has been definitely a trend which we see where the metros and tier 1 have been growing slower. It's not that they are not growing. They are growing slower as compared to the tier 2, tier 3, tier 4 cities kind of a zone in terms of what we see. So there is that kind of a trend which is visible. We definitely see that even in tier 1 cities and metros, there is definitely a growth which is happening. It's not that there is no growth. See, it's a question of the overall economic conditions and real estate conditions. We'll see the metros growing vertically, the tier 1, the smaller towns growing more, you can say, horizontally. You also have the metros like Bombay and Delhi growing into NCR, Gurgaon, Vashi, etc. So there is growth. It's not as if there isn't growth. But in the current trend, the number of the construction activity, so to speak, has taken a little bit of a slowdown. And as a result, the growth seems to be a bit lower.
Okay. So has the construction business from the first half perspective declined on a YOY basis still? The primary real estate, paint sales that you do?
Our business has gone up, but not gone up as much as it was going up earlier. Yeah, but also what has happened is monsoons has affected the projects a lot, because all the big projects where exterior painting kind of happens, I think that has definitely taken a toll this year to that extent.
Got it. So in terms of now, given that, there's this renewed focus on the lower end and, distemper and putty and also, you're seeing obviously a higher growth in tier 3, tier 4, which tends to have a more, product mix in that segment. So over a 3 to 4 year period going ahead, would it be fair to therefore assume that, volume growth will obviously continue to lead value growth going ahead?
If you can predict the Indian economy accurately for the next 5 years, I'll predict the paint rate for you. Exchange basis.
Okay. All right. So, and these newer customers that are coming in at the lower end, how long does it take before they kind of start premiumizing? Because many of them are coming in the last, say, 1.5 years post your focus there.
So it is not as linear as you are kind of seeing. So, we don't find that people will kind of try each category and then move on to only one category up kind of a thing. We see kind of very differing phenomena also which happens. We see a distemper consumer kind of graduating onto the luxury product also to that extent. And there is also a mix where people would kind of get one room done with the luxury product, which is basically the front-facing room, and the other rooms basically he might continue to in terms of graduating only onto an economy emulsion. So it's very difficult to kind of say that he will take 10 years or 15 years to kind of finally come to the premium category. So it's bit of a non-linear kind of upgradation which kind of takes place. So very difficult to kind of really predict that this set of customers which have come into economy will definitely move into, say, the premium or the luxury over a defined period of time.
Thank you for that detailed explanation. Just the last question. Is it possible to share the top 10 cities' contribution to sales?
We don't know it offhand. Sorry.
Oh, great. Thank you and all the best.
Thank you. Ladies and gentlemen, we take the last question from the line of Abhishek Bhandari from Macquarie. Please go ahead.
First of all, I'd like to wish good luck to Mr. Anand and Mr. Merchant post their retirement from Asian Paints. And, congrats to Amit and Mr. Jayamurgan on your new roles.
Thank you.
So Amit, my question is to you. What are some of the new priority areas or focus areas for you, once you resume your role from the month of April?
You're asking a board question. So I think I'm looking forward to my stint in the new position, but we will talk about it more later.
Okay, all the best. All the best.
Thank you and happy Diwali to everyone.
Thank you. Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. KBS Anand for closing comments.
Thank you, everyone. It was a very lively discussion, and a happy Diwali to all of you.
Thank you very much, sir.